And then the most important one, if you have a house already, you have a contract, we're going to need a copy of that sales contract. Or if you're looking to refinance your current property, we're going to need a copy of the deed. So this slide, right, is very important. I'm going to leave it up for a couple more seconds so you guys can take a little bit of notes. So this is what all the lenders are going to use in order to get you approved for your mortgage loan. And if you think about it, right, these items that we're looking for as a lender, it's not much. It's maybe 5 or 6 things. And with this information, we're able to determine if you qualify for a mortgage and how much you qualify for a mortgage. All right, so once you have all those items collected, we're going to go to the last step and get pre-approved. So like I mentioned before, that pre-approval process, that's when we determine if you qualify for a mortgage, if you do, for how much, and it'll let you take the next step and looking for that realtor, finding a property that you want to put an offer in, and go through the whole process. Having this pre-approval, so once you get pre-approved, once you complete the pre-approval process, we'll give you something called a pre-approval letter. And that letter is going to state how much you can afford, the term of the loan that you're looking to get. And this piece of paper makes your offer very enticing because the seller knows that you're already working with the bank and that you're qualified for this dollar amount. So if a real estate agent makes an offer and that offer does not come with a pre-approval, a lot of sellers are going to go ahead and turn it away because they don't know if you're going to be able to qualify for that mortgage or not. That pre-approval, it's a game changer. And nowadays, most real estate agents will require a pre-approval before working with the customer. They want to make sure that you qualify for a mortgage before they go ahead and invest their time in doing all the research and finding the right house for you, and then come to find out that you're not able to afford that house. So that pre-approval is very important in the home buying process. And then if you end up not qualifying for a mortgage, right, there's several workshops that you can attend. The mortgage process, we have other seminars out there that can help you with the buying process that goes a little bit more in detail on how to improve your credit. And if you're looking to get one of these 2 or 3K loans, we have a separate workshop that can help you qualify for one of these products and go into more detail on what you can do with these renovation funds. All right, so I know within the past hour, right, I talked about a lot of things, a lot of products, a lot of numbers out there, but I just wanted to open up the floor and answer any questions on any of those slides that I went through within the past hour.
Okay, thank you so much for that deep explanation on the mortgage process. And I know that my people have a lot of questions for you. And I also have a list of questions, some that have been sent to me by some of my clients who are not able to join today, but will be, probably some of them are at work and will be going on YouTube. Before we proceed, I'm gonna, if you have found value so far in this, in the information that Jason has provided within the last 1 hour, give me a 12 in the chat box. Okay, if it has been making sense to you so far, give me a 12. Thank you, I see that coming. We're streaming live on YouTube, just so you guys know. And I'm going to put in here the YouTube link. Oops. Okay, give me 1 second. I'm going to put in here the YouTube link and while we're here, I want you guys within the next 2 minutes to click on that link and make sure you subscribe to that page for me. Doba is bringing you all this good information for free. give us some encouragement by Mr. Delaja, we're on YouTube. This information is streaming live on YouTube. Go ahead right now. Go to that link right now and subscribe to that page. Then come back here and give me a 13 that you have subscribed. I'm looking out for that right now. I'm also going on my YouTube page to see what you guys are doing. At least give us a thumbs up and clap by going on our YouTube page and giving us a thumbs up, giving us that subscribe. Click on that subscribe button. Already a subscriber. Okay, thank you. Thank you. If you're already a subscriber, you can as well let me know. I just want to make sure that you guys know where that link is and you can find this information, because all this information, it's a lot to swallow within 1 hour, but you can always go back there to replay and get a grasp of what you need to do, and you can share with your friends. That being said, you can start putting in your questions in the chat box so that Jason can start attending to them. But while we wait for those questions, I'm going to start throwing some questions to you, Jason. These are some of the questions that people have asked me, and they're asking, and they want me to go ahead. And Adelaja, thank you for subscribing. Okay, so one question came in. What is APR?
So there's two things. There's interest rate and there's APR. A lot of people get confused. So the interest rate is the amount that you'll be getting charged on a monthly basis on your mortgage loan. And then there's APR, annual percentage rate. So the annual percentage rate is the cost of the loan that you'll be paying a year, annually. So what that means is when you sign up for this loan, if you had any closing costs included in the loan amount, the APR, the annual percentage rate, is going to be higher because that's not included in that monthly interest rate. So it can be a little bit confusing, but the interest rate and APR are two different things. The biggest thing is when you're, signing up for this loan, either if it's for a bank or if it's for, auto loan, always ask the questions, what is my interest rate and what is my APR? Because sometimes, right, they may be including those closing costs that you're not aware about. And now you're going to see that your APR is double of your interest rate. So I always ask the question, what is my APR? Because that's going to determine the cost of the loan, not what you're getting charged on a monthly basis.
Okay, so, I hope that answers your question, Ms. Pilani. Can a green card holder buy a home, Jason?
Yes, if you have a green card, you're a resident alien, right? You can definitely buy a home.
Okay, what if I only have a work authorization and I'm still awaiting the arrival of my green card?
So it all depends on the type of, on the category of your work authorization card. Same thing, that is looked at on a case-by-case basis. So it depends on the category and how long you had that work authorization card for. So, if you'd like to get into more detail regarding your specific situation, you can always email me, give me a call, because it varies. Everyone's case is different.
Okay, guys, I see the subscribe coming in, but I've only seen an increase from only 3 people. We are 20 on this call. 3 people have identified that they are already subscribers. 3 people have just subscribed. What are we all still waiting for? The rest of the team, I'm waiting on you. I'm looking at it. So the next question that we have from the chat is, what if you don't have a paycheck and you own a business? Can you use the business tax return to purchase a house?
Of course, yeah. So if you're a business owner and you have, at least 2 years of tax returns, we're able to calculate the income from those tax returns, and we'll let you know how much you qualify for a mortgage.
Okay, so does that mean that if you own a business, you need to have existed for a minimum of 3 years and must have filed taxes for a minimum of 3 years?
2 years.
2
So
years.
you need to be established for at least 2 years, correct?
And does that also mean that you need to have declared, how much profit should you have declared in that taxation, in that tax, for you to be able to qualify for a home? Because some people have losses in their business return, and that's what they want to use to file to apply for a loan.
Correct, yeah, and that's where we have, the most struggles with. Due to the pandemic, a lot of businesses didn't do that well, and their income is a lot lower. So same thing, goes case by case, right? You want to show profit if you're looking to buy a house. If you have no profit or, losses, it's very hard to get you approved for the home, because the bank is going to look at those tax returns and say, if you're not making a profit, how are you going to be able to afford this mortgage payment? So having a profit, and the number of the profit changes on the amount of money you're looking to borrow. So for someone, right, they can be making 40,000 in profit, can be different if they're looking to buy a house, if that's 500,000, 600,000. So it all determines on, what's your budget, how much you're looking to buy. That's going to determine your profit.
Okay, so still on that question, if your profit is about 40,000, can you give like a rough estimate of the kind of house that person and the amount of qualification the business owner can get?
Sure. So let's for an example, right? Let's use that business owner is making 40,000 a year, and they have about $500 in monthly obligations. Just to give an example, those obligations can be, credit cards, auto loans, whatever it is. And the taxes on the property is about $6,000 a year. Okay.
So my question is getting Jason to do some maths live here. Okay, so let's give him a second to bring that up. I'm still waiting for those subscription, guys. Okay, I see more questions coming in. Okay, I see people saying, okay, Rolake says, I'm already a subscriber. Thank you for subscribing. We appreciate the support.
All right, so to go back to your example, right, I did the calculations. Like I said, someone's making about 40,000 a year. They have about $500 worth of monthly obligations. And the taxes for that property, taxes and insurance on that property is about $6,000 a year. You're looking at about $230,000 as the loan amount. So someone can potentially buy a property for, $230,000 based off that income that you provided and that monthly obligation.
How much did you call the monthly obligation again?
500.
How much? 500.
Mm-hmm.
So what is the profit from? Okay, so you're saying the net amount, which is the AGI, should be 40,000. If someone has an adjusted gross income of 40,000, then they will be able to qualify for 230,000 roughly in mortgage as a business owner that has operated for 2 years.
2 years.
And the 2 years must have had profits, correct?
Correct. And there's something to remember. If you're a business owner looking to buy, we average 2 years of tax returns. So whatever you made in 2019 and 2020, we're going to average that in order to get you approved for the mortgage. So, let's say 2019 you made 20,000 and 2020 you made 40,000. We're going to average the two, and we're going to use that number towards the calculations.
Okay. So another question here, someone just also came up and said that she has heard a mortgage lender say if your if your work authorization is not expired, she says, I remember a mortgage lender said you can purchase a home as long as you have 3 months prior to the expiration of your work authorization. Is that a myth or is that true?
So that is true, but same thing, we have to look at the category of that work authorization card, because each category, there's different guidelines.
Okay. Another question that came in is the pre-approval. How long is the pre-approval letter valid for? Like you said, homes are selling fast. Will it expire? And will we need to get another pre-approval?
Gotcha. So the pre-approval is good for 90 days. So if you do not find a property within 90 days, we will have to do another pre-approval to extend it for another 90 days. What that means is that we just have to pull your credit again to make sure that your debt, your liabilities are the same or less than before. And we have to look at your income one more time to make sure that your income is still the same or higher.
Okay, so that's with respect to the question on the business, guys, that also includes people with 1099, correct?
Correct.
Because if you have a 1099, that means you're gonna have a Schedule C in your tax return. And even if you have a W-2, meaning you're an employee and you also have 1099, by the time your tax return is prepared, the Schedule C and the W-2 get aggregated to a point where, so whatever profit you are declaring on that's your business, which is the Schedule C, if it's if you've taken out all your profit and you don't have any profit again, whatever loss that you declare, let's say for example you have a W-2 of 40,000 and you have declared a loss on your 1099 of 5,000, your AGI is going to go down by that 5,000. So your adjusted gross income that will be used as a basis to calculate how much you would qualify for mortgage would only be 35,000. Okay, but if you have a profit on that business of 20,000, for example, and you already have a W-2 income of 40,000, that profit flows into your adjusted gross income and it takes you to 65,000. And that's the basis for which your qualification would be made. But remember, Jason said it is always averaged out between year 1 and year 2. So for 2021 now, you'll be required to provide your tax of 2020 and 2019, and they would average whatever that adjusted gross income is. Am I correct, Jason?
That is correct.
All right. I'm just want to be sure I'm not misleading you guys. So going to the next question. What is the best option between mortgage banks and using banks? I don't know if I'm does that question make sense, Jason? Maybe using banks and using some other mortgage lenders that are not bankers. That is not a bank.
Gotcha. Okay. I believe I know what that person is asking. So to give example, using M&T Bank as your lender, something that differentiates us from different, mortgage lenders out there, or mortgage brokers, that's what they call them, is that we are gonna service your loan from start to finish. So what that means is that once you get the mortgage with us, we're not gonna sell it. So you're gonna keep on making your monthly payments to us for those 20, 30 years. These other people out there, like mortgage brokers, they're gonna go ahead and help you with the transaction. And then after month 1, what they're gonna do is they're gonna sell your loan. So what that means is one day you're paying, ABC company. The next day you're going to be paying someone else. So that's what, the biggest difference between a bank and these other lenders out there is that some of these lenders are just the middleman. They're going to help you. They're going to sign you up for this mortgage, and they're going to turn your loan, give it to someone else that wants to service it.
Okay, so which means if we go with a bank such as M&T, you would always have to make your payment to M&T. You don't have to. The M&T will probably not sell your loan to another company. Is that correct?
Correct. M&T will not sell your loan. We will service your loan. So any questions, anything, right? You contact us directly. These other people out there, right? You don't know who you're dealing with. One day it can be with this person. The next it can be with someone else.
And I understand what Jason is saying because I know people have come to me with their taxes like that.